Good morning, ladies and gentlemen. And as Crystal has mentioned, welcome to this webinar on business rescue. This is the second in a series of webinars that in South Africa we have presented this year in terms of public practice. The webinar has been developed by ACCA with assistance from two of our fellow ACCA members in response to the feedback from our members and as a result of local regulatory focus. My name is Nomsa Nkomo and I am the policy manager for ACCA. We are delighted to welcome back Mandabai Kalaluka, who is the BR practitioner in public practice in this second series today. And he is joined by Mashe Papia, who is the government specialist in this area. They will be our webinar chairs also in this morning. This series of webinars does not aim to teach you local members how to become a business practitioner, but we are trying to ensure how do you add value into public practice. It also aims to provide you as our members with a good understanding of the role that you play and the responsibility you have as you work with the various firms to a certain degree and how best to work with them. So ladies and gentlemen, each presentation today will last for about 20 minutes, and we'll also have time for pause. And as Crystal has mentioned, we'll also have a Q&A session that is scheduled, and you'll be using the widgets. I think also I would like to welcome, I saw that I think the whole country is represented today, and I'm really happy to see that. People from Louis Trichardt, Durban, East London, I think I saw Mbombela, which will be Mpumalanga, and Cape Town. One key thing about this webinar is as an ACCA member, you will be able to count towards your verifiable CPD if this is an area that is relevant to your career. And the CPD certificates will be sent out to each member at a later stage. At this moment, I will hand back to Crystal to welcome Mandabai.
Yeah, great. Thank you. Thank you for that. Before you go, Nomsa, we have some links and so on that we want to share for people for further questions and so on. So maybe we can just ask Carl to put up that slide too, and we can make sure that we don't forget about that. Can you just talk us through those three resources that people have access to, Nomsa? You are muted still. Remember to unmute. It's lovely to look at you speaking, but we can't hear you at the moment.
Can you hear me now? Thanks,
Perfect.
Crystal.
Perfect.
As I was saying, that you can send all of your queries to members ZA at accaglobal.com, and that only comes to our local office and not the UK office. We also have various CPD offers in our global website, and we have two of those links that you can go on and see which webinars are you interested in as a local member and be able to remain a member in good standing and continue with your professional development. Thank you.
Yeah, great stuff. By the way, you will have access to the slides that are shared today. So do take your notes, but you don't have to frantically take notes to including those long URLs that you saw there on that slide. You'll be able to get that from the presentation that will be shared with you. If I may just ask both Nomsa and Wendabai, if you can just lower your camera slightly, just pull your, if it's on your screen, just pull your screen forward slightly so we can see your faces. And Wendabai, I'm going to ask that you maybe just shift your self just away from the window so that it's not behind your. Oh, that window is even worse. Yeah, if you face the window, then we can see you properly. That's perfect. If you sit from that side from the desk, then we know. So you didn't see Wendabai move. I saw him move now as attendees. You'll see him just now. And I'll introduce Wendabai to present the first part of our discussion. You'll see that there's a slight difference because we have two speakers. They obviously will cover different elements in terms of the focus between the private sector and the public sector in this area, this field, expertise field. But before we do so, let's just see. I'm going to launch a poll, and you'll see there's a window appearing there for you to participate, and you can vote there, basically to indicate your status as a business rescue practitioner. So If you are registered as a business rescue practitioner, you'll know what that means. If you can answer yes to that question as a junior or a senior, or if you're not, it's new for you. Then at the moment we only have one that's registered in our whole room, and 24 others that are 25 that have voted, 20, 30 people that have voted. So clearly this is a new topic for most of us. So really looking forward to learn about this and how we can incorporate this as a service offering to our clients too. Yeah, I'm gonna. It's clear everyone about everyone. One person in the webinar that's registered as a business rescue practitioner. So panelists, you've got your job cut out to explain to us how we can become business practitioners, business rescue practitioners, and build our benefits to our clients in that way too. So I'm going to end the poll now. Thank you for participating in that. You'll see there the results is 97% of people on the call here today on the webinar are not registered at all. So it's new to us. Now, that brings us to jumping into the topic. So Wendabai, Kala Luka, I've been on a few webinars with you, always packed with information, you know, sort of. So please don't intimidate us with too much, but yeah, it is a topic, it's an important topic. So if you can start off by explaining to us this whole new thing in the Companies Act and how we as service providers work with businesses around the business rescue. And then Carl, if you can switch on the slides for us so we can see, yeah, and go to speaker view so that we can see Wendabai too, please. So Wendabai, over to you.
Thank you very much, Christoph. Can everyone hear me in the room?
Yeah, we can hear you.
Perfect. Thank you very much. Business rescue is a very interesting landscape, and just watching the polls which you've just conducted now, Christoph, it actually scares me because it sort of like highlights the challenge that we've been sort of like dealing with, not just from the profession point of view, but from the regulator, which is the CIPC.
Wendabai, I'm just going to interrupt you quickly, just for the sake of the quality of the sound. Can you turn the volume on your computer down a bit, the speaker volume? Because we get a bit of a feedback so that everyone can hear you properly. Great.
Okay.
Thanks.
Is that much better?
It is better. In fact, if you don't mind, even muting yourself for this while you're talking.
Okay.
Pushing the volume down totally, then we can hear you properly.
Yes, I've actually muted it completely.
You know, in fact, I think it's because you and Nomsa are sitting in the same room.
Oh.
So one of you need to push down your volume on your computer totally. This is the technology, it helps us a lot, but when we sit in the same room with two different computers, we will have these kind of issues. But let's rather sort it out that everyone can hear properly. So if one of you switch down your volume on your speakers totally, then we'll be able to hear properly. Thanks.
Yes, I think the quality is much better. Nomsa has switched off hers, so I can actually hear.
No, that's cool now. That's cool. Yeah.
All right. So I was just saying that the poll that we've just taken highlights the challenges that we have within the profession of business rescue. If you notice there, we've got some senior business rescue practitioners, and you've got a whole lot of people who are actually not in the space. So there is a huge gap between those who are running in that space and obviously doing a lot of work within that space. And then there's a huge gap if you compare with the people that we're supposed to be bringing in. So it's almost like you've got no pipeline of your business rescue practitioners. So I hope with all the people that are seated around the room today that we'll be able to share valuable information which can get a whole lot more people to be interested and join in. All right, so if we can just move through the slides quickly. I'm then going to take you. So I'm going to look at, just emphasize a few things, and please take note that this is not a full-blown business rescue presentation. It's a very wide topic. So I'm just going to focus on very specific things. I'm going to look at the legal framework that has given birth to the field of business rescue. Then we'll look at the aims and objectives of business rescue. We'll look at the regulator and the regulation of business rescue in South Africa. I will spend a bit of time just on individual licensing versus what we call recognized professional body accreditation. There was a little bit of a gray area around that particular item there, but last week we got confirmation that the gray area has been resolved. And then the confirmation there, just to confirm that ACCA is actually an accredited, recognized professional body in terms of business rescue. And then after that, we'll look at recommendations around compliance and obviously the challenges that are facing the profession. Okay, if we just move on to the next slide very quickly. Right, so what is the framework that governs us in business rescue? All right, business rescue is governed in terms of Chapter 6 of the Companies Act 2008. Now, don't be very surprised if you notice that gap that we saw in the poll in terms of, not having a pipeline. The truth of the matter is Chapter 6 of the Companies Act in terms of business rescue, it's something that is very new. So because it only came with the Companies Act 2008, which was effectively implemented on the 1st of May 2011, it actually means prior to that, we had absolutely nothing that spoke to business rescue. In fact, you realize as I proceed in the presentation that we did have something that was supposedly business rescue, but it was called judicial management then, and it wasn't so popular. So in most cases, whenever there was financial distress and financial problems, people simply just ran to the aspect of liquidation. So Chapter 6 in the Companies Act is the framework that gives rise to business rescue. And the objective of Chapter 6 is essentially to balance stakeholder interests. So you see there in terms of what the Act sort of like lists as stakeholders in any business organization. You've got shareholders, you've got employees, you've got directors, you've got creditors, you've got unions. And these are all stakeholders with interest in the success and continued operation of any business enterprise. Now, what was found under the old Companies Act 1973, particularly as it pertains to liquidations, was that normally your lenders had too much power within themselves given to them by the Act. So you can see there I use the term trigger happy, whether they are secured or non-secured. So what essentially would happen is if an entity had borrowed and it had failed to meet its repayments, normally people would just jump into the terms of the bond or the loan agreements or the debenture or whatever it was, whether it was secured or unsecured, and institute legal proceedings, which normally would lead to a liquidation. So the idea of Chapter 6 is to balance the stakeholder interest, to give everyone equal opportunity, and also to ensure that businesses do not rush to closing down, because we understand that businesses create employment, it's good for the economy, it's good for our country, and the aim of the government when Chapter 6 was introduced was to provide a platform which sort of like served as sort of like a first go-to process in order to try to resuscitate and to revive a business, as opposed to just straight going on to closing the business. All right, if we move on to the next slide there. So in a nutshell, based on what I've just explained, you are going to find some relevant information in Section 128 of Chapter 6 of the Act. Section 128 of Chapter 6 of the Companies Act provides for rehabilitation, and this is essentially what business rescue is all about. It provides a platform for rehabilitation. It provides a platform for what we call temporary supervision of the company. Now, mind you, when we talk about temporary supervision, it's not something that is completely new. Like I said, in the old Companies Act 1973, that was under a section that they used to refer to as judicial management. Further on, I do have a slide where I'll try to compare what a liquidation and judicial management was like versus what a business rescue provision is. And the importance of Chapter 6 is it gives companies what we call a temporary moratorium. I always struggle with that word for some reason. For so many years, I've been talking about that word. So it's a moratorium, and essentially what that signifies is like it provides a shelter for companies. It's like a protection whereby for businesses who have entered into business rescue, they are sort of like shielded from creditors. So they have temporary protection such that the no-court orders can be actually be instituted against them. No new legal proceedings can be instituted against the company while it's in business rescue. And the whole idea is to give the business protection and give opportunity to what we're going to call business rescue practitioners. I think I cover that later on, in order for them to have a sort of like a viable opportunity to turn the business around. So that is the temporary moratorium that we're talking about there. And then obviously it talks about the implementation, if approved, of a business rescue plan. So when a business goes into financial distress, I'm not too sure if I defined that in the presentation, but when financial distress has been ascertained by any of the stakeholders that we looked at previously, they can institute business rescue proceedings by appointing a business rescue practitioner. One of the first tasks of a business rescue practitioner is to draw up a business rescue plan, which must be presented before all the stakeholders for voting onto the plan. And once it's approved and the plan is also filed with the CIPC, then the business rescue practitioners goes on to implement that particular plan. All right, if we just go on ahead. So the aim of all this is obviously to maximize the likelihood of the company continuing in existence on a solvent basis. All right, that is the whole essence of instituting business rescue proceedings. Okay. One thing that you notice about business rescue, for those of you who've got experience in it, is like the government really aimed at simplifying that particular process. Instituting business rescue proceedings is not complicated at all. In fact, it only goes through a form which is a form COR 123.1, which can be completed and signed and filed with the CIPC. Interesting enough, now it has actually been noticed that whereas previously the institution of business rescue proceedings was mostly by the directors of the company, so it was about the directors of the company themselves going to CIPC and saying, look, we are under financial distress, we need the protection that business rescue offers, and then they would institute the business rescue proceedings. We've had cases whereby business rescue proceedings have been instituted by employees and by unions, of which I think Africa Bank was one of the classic example, a very interesting case that was. And just out of interest, for those who are interested, I think after the webinar, if you just email me, I can give you, I've got a nice bank of the cases which have happened around business rescue. And each of these cases always brings in a certain different flavor into business rescue proceedings. So the most important point there, please note that no one can execute court orders or commence court proceedings against an entity whilst it's in business rescue. So that is one of the advantages of business rescue. We can move on to the next slide. All right, so then obviously one of the important components of a business rescue is what we call a business rescue practitioner appointment. A business rescue practitioner is essentially the center of our business rescue. So once the business goes into business, once the business decides to enter into business rescue, the first step that they need to do is to appoint a business rescue practitioners in terms of Section 138. Now, interesting enough, I'm going to share with you something that's very interesting that happened last week, just this past week. It was something that I think in the profession we're all looking forward to. So the amendment, well, I wouldn't really say it's an amendment to the Act. The amendment is still yet to be presented to Parliament, but a practice note with relation to Section 138 was actually issued because there was confusion in terms of the qualification and the appointment of a business rescue practitioner. So Section 38 ideally regulates the qualifications required for business rescue practitioners. So if we have new members in the room interested in this particular space, please pay particular attention to Section 138. It essentially stipulates your qualifications as a business rescue practitioners, who can apply, and what are the conditions. So in order for you to qualify as a business rescue practitioners, according to the initial provisions of Section 138, all it said was that a person had to be a member in good standing of a legal, accounting, or business management profession. If you can just go back one slide for me, exactly. So that was in line with section 138, subsection 1, subsection A. And then it also required that you must be licensed as such by the CIPC. So essentially what those two provisions there, and I've just extracted those 2 points, what they tell you is that you need to meet those two particular requirements. Like I said, there was a lot of confusion around who qualified for registration as a business rescue practitioners, because according to the Act, you could either go through what we call a profession, accredited profession, like a recognized professional body, what I refer to as an RPB, or alternatively, you could go straight to the CIPC. Now, that presented administrative challenges in that the CIPC had no capacity to monitor the compliance and the good standing of business rescue practitioners. Hence, their intention to push the regulations and the monitoring through to recognized professional bodies. However, because the Companies Act was not mandating the CIPC to do that, we actually had some court cases around that. One of the common court cases, which was still currently in the High Court, was that of Mr. Salmons, who essentially sued CIPC as well as the TMA, which is one of the professional bodies, for suspending its license. But with the practice note, which we received last week, it was signed by the commissioner on the 26th of September 2018. It essentially now stipulates that those people who are licensed exclusively through the CIPC, when the licenses expire, they will not be renewed. People will only be allowed to hold business rescue practitioner licenses when they are registered through a professional body. All right, so that is the major key matter arising from section 138. If we move on to the next slide. And by the way, through your form CR 126, you can apply for business rescue at the CIPC. But now just take a note that according to the practice note, which was issued 1 week ago, you cannot do that, and you can only do that through a recognized professional body. So on this slide, I know it's not very clear, but maybe I'll just highlight some differences you're going to see. So for you to gain perspective of what this business rescue is, I tried to compare it with liquidation, which was essentially insolvency. So you could see that your business rescue only came in line with Companies Act 2008, whereas your liquidation was in the Match Order Acts. In terms of administration, you'd also notice that business rescue is highly administered through the CIPC. And when I use the word highly, I was trying to avoid using the word exclusive, because we have found that from experience that the courts have actually played a very huge role in terms of determining the direction and the actual process of business rescue. So while CIPC is the recognized and the official regulator of business rescue within the country, the courts have actually played a significant role in terms of case law, in terms of shaping business rescue. And as opposed to when you look at insolvency, for instance, which was obviously administered through the Master of the High Court. All right. The other major difference will be coming to SARS. And I think this is one reason if SARS was to object to business rescue being advanced in the country, I would understand why. So if you see under the old act, when you looked at liquidation, SARS was actually a preferential creditor compared to other creditors. In business rescue, SARS is a normal creditor. Okay, and then obviously there'll be other measures and other differences which occur between the two. And like I said, if you need more detail on this, please just email me. I'll be able to give you more detail so that we can move on to the next slide. All right, so in terms of regulation of business rescue, I think as I've indicated, the official regulator, and again, I'm using the word official there deliberately because they are not the only ones who are shaping this particular field. The official regulator of business rescue, particularly from the licensing perspective, is the CIPC. So just to clarify, when we were talking about recognized professional bodies and the CIPC in terms of issuing licenses for business rescue practitioners, currently as it stands, if you are ever going to be interested in business rescue and becoming a business rescue practitioner, your first step is for you to affiliate yourself to what we call a recognized professional body, of which ACCA is one. There are several other recognized professional bodies accredited by the CIPC. Then what this professional body is going to do is they're going to issue you with what we call a letter of good standing, which is essentially a letter of recommendation. That accompanied by your official application, which is on the COR 126, and other supporting documentation as stipulated in the Act and according to the application to the CIPC. They will then be forwarded to the CIPC to issue the license. So just to clarify there, the actual license is not issued by the recognized professional body. The recognized professional body is going to issue a recommendation, a letter of good standing, which should advise the CIPC that one, you are a member in good standing as stipulated according to the Act. And also, obviously, if you are going to be admitted as a member of a recognized professional body, one of the assumptions that comes with that is obviously that you have the required competency and sort of like an ethical dimension for you to be accredited. So currently, the licensing of the BRPs is the conditional licenses. And like I said, the development that happened last week is that the so-called conditional licensing is essentially fallen away. So for all new applicants into business rescue, you cannot be granted a conditional license anymore. It has to go through a recognized professional body. CIPC will, however, allow those who are on conditional individual licensing to continue as operating as practitioners until such a time that those licenses expire. And once they expire, they will not be renewed unless if they go through a recognized professional body. Your application has to be done on a CIPC form, which is a COR 126. If you go into the CIPC website, you should be able to find that particular form. Normally, the supporting documentation that has to go with that application are things like your detailed CV, because they need to see whether you've got the sort of like requisite competencies and qualifications for you to be able to turn a business around. All right. And there's also been a lot of emphasis now on business skills in terms of this particular space. Like I said, as opposed to liquidation, whereby you're looking at strictly a legal process of winding down an operation, in business rescue, the intention is not to close down the company. The intention is actually to save and revive that particular business. Okay, and then the grading of BRPs, you see that they've got 3 grading levels. So when you join as a business rescue practitioner, you can either be accredited at junior level, you can be graded as an experienced, or you can be graded as a senior business rescue practitioner. My only concern at the moment is what you're going to find is that we've got senior business rescue practitioners, a lot of them in the industry, and they are well established, they're doing a lot of jobs. We don't have quite enough experienced business rescue practitioners. And then we do have quite a few juniors who've joined us, particularly from the legal profession. And there is a huge gap between the experienced and those who are starting out. And that is something that we are hoping to resolve through some development, career development initiatives. Okay, so I'm not going to speak too much to that slide that you see there, because like I said, the individual versus recognized professional body accreditation, we had that challenge in the past, but now it has been resolved. A decree has been issued through the practice note, which was signed on the 26th of September 2018, that individual licenses are going to fall away. So going into the future, your recognized professional body accreditation is the route that we're going to take. So you're going to affiliate yourself to a recognized professional body who are going to issue a recommendation for your accreditation as a business rescue practitioner. So just good news to ACCA members, and this is something that we are also proud of, that ACCA is not only submitted the application, but has been confirmed as an approved recognized professional body for business rescue. So which means ACCA can recommend its members for accreditation with the CIPC and for the issue of a BRP license. Okay, so applications can be granted. And if you look there, in terms of consideration for competence and experience, the sort of like competence which is required, if you looked at the slides when we started looking at the requirements for a business rescue practitioner, obviously it stipulates that anybody from the accounting profession, from a legal profession or business management profession can actually be accredited. All right. The initiative that ACCA takes very seriously, I think in terms of ensuring the quality and ensuring that we manage the risk around business rescue, because it is a field that carries a lot of risk, is to ensure that our members are competent. And that can only be ensured by ensuring that we institute strict CPD regulations around that. So if you see there, you sort of like have the CPD minimum requirements that have been set. The ones in red are the one that the CIPC has stipulated as the minimum. And we are just simply saying we're going to obviously require those kind of hours in terms of CPD. The other things that, the other fact that CIPC is concerned about, which we are busy addressing in our Business Rescue Liaison Committee meeting, is in terms of ensuring that your CPD must not be biased towards your profession. Now, you might have noticed when we spoke about the qualification of BRPs, that BRPs can come from different fields. You can come from a legal profession, from an accounting profession, or from a business management profession. Now, when we talk about CPD, we don't want people from the legal profession, because they are lawyers, sticking to CPD, which is legal, because the requirement of a business rescue practitioner is that they must have an all-round kind of competence, not just in legal, but in business management, for them to be able to turn the business around, marketing, entrepreneurship skills. They must know finance and financial reporting. They must know tax and governance processes and those kind of things. So the CPD must address sort of like your holistic development needs as a business rescue practitioner. Okay, if we move on to the next slide. So the administration challenges, and this is the final part of the presentation. And please be aware that these administration challenges, for those who are keen in joining, they shouldn't stop you from joining, but you must just be aware that as you join, you're going to find these. And for those, I noticed we have some senior BRPs within the room, and you will agree with me that we have a lot of uncertainties in terms of the legal provisions of the Act. Now, if I may just make a statement here with regards to the uncertainties, that it's not, while it might appear negative, it's something that was very deliberate from the regulator point of view. So firstly, we have established that business rescue as a Chapter 6 provision of the Companies Act is fairly new in the country. So you're talking about a provision and an industry that is barely, I mean, if you look at 2011 to now, it's barely 7 years old. It's something that is still very new. It's new to the regulator, it's new to us as a profession, it's new to the industry, it's new to the markets, and hence you find that the knowledge of it is quite limited. In terms of the legal provisions, they really didn't have the full idea of what to include in the Companies Act when it comes to regulating business rescue practice. So what the CIPC's approach was when business rescue was initially instituted was to sort of like provide general guidelines, and they were relying on the courts of law to essentially sort of like shape this particular industry. So what you find is when you go into the Act, there are a lot of provisions which are never clear-cut. A lot of provisions will sort of like leave more questions than answers. And a lot of business rescue practices that we are now adopting and we are sort of like recognizing, they're actually sort of like coming more from your case law in terms of all the court cases that are happening. And I can assure you there are a lot of court cases around business rescue, as you would imagine. It's something that is very legal in nature. So there's more guidance from the case law as opposed to the provisions of the Act. And like I said, that was a deliberate move from the regulator. Okay, and then we've also noticed that there's a lack of capacity of the regulator to administrate. Some of that lack of capacity is made worse by the fact that the Act did not confer as much power to the CIPC. I'll give you one example, one practical example which the CIPC is facing as a challenge now. Okay, let's say, for instance, a company instituted business rescue proceedings and they appointed me as a practitioner to obviously oversee the rescuing of that particular business. If I become non-compliant because maybe I'm involved into some fraudulent activities or have engaged in unethical conduct, and CIPC then decides that they are going to deregister me or they're going to take away my license, the contract of business rescue happens between the business and the business rescue practitioner. CIPC only gets informed of the appointment of a business rescue practitioner, and CIPC, my license is taken away. CIPC actually does not have the power to stop that rescue proceedings. They can only talk to the business or to the company to ensure that they terminate the services of the business rescue practitioner. CIPC has was when the business rescue plan was filed with them. And after that, they've got no idea whether the business rescue is still ongoing or not. And that challenge is from a regulation point of view. And we are hoping that as we continuously review the regulations, we're going to improve the institution of business rescue. All right. One of the other challenges that was identified was in terms of the education of BRPs. Now, you would understand that because of the legal nature, initially when business rescue came onto the fold, a lot of legal practitioners obviously jumped onto that particular space. Now, not to despise legal practitioners, but you'd also agree that your legal practitioners would probably, in some cases, have limited knowledge in terms of actually turning a business around from a business perspective, because they do not have the prerequisite entrepreneurial and management skills. And then when you did have accountants coming in as business rescue practitioners, yes, they would have a little bit of governance information there and knowledge, but they might not have the prerequisite legal knowledge that goes with the legal nature of the proceedings. So the fact that people came from specific backgrounds created a little bit of a problem. With bigger rescue proceedings, what they've simply done is they sometimes appoint more than one business rescue practitioners, which then works in favor of the business rescue, because then you can appoint an accountant, appoint a legal practitioner, and maybe appoint somebody who with a little bit more entrepreneurial knowledge. All right, and then your much bigger practitioners, and by bigger I simply mean your big corporations, like say for instance legal practices like is it Windsor, or if you were to look at companies like your big auditing firms, the advantages that they do have when they go into business rescue is that they have the sort of like the manpower or the vast skill set for them to obviously provide those kind of required skills. So that then does help. But then what it has done is for smaller liquidations, because they cannot afford the vast fees that these sort of like bigger companies demand, smaller companies are disadvantaged. Either they have business rescue practitioners who have got no competence or the required knowledge to actually conduct a successful business rescue, or they simply just don't go into business rescue at all. All right. Then the lack of guidelines for the resignation of business rescue practitioners. I think I've already spoken to that point there, that you can't force the business rescue practitioners to resign. The companies have to literally terminate those proceedings. And we are aware that there have even been such situations where some business rescue practitioners were under disciplinary procedures, which means they were no longer licensed to be business rescue practitioners. But because the business rescue proceedings were ongoing, the companies just went on with them as if nothing had happened. All right. And then there's also the issue of costs. The issue of the cost is what we are trying to also sort of like engage CIPC with the government as well on. In that business rescue, you might have noticed from what we've discussed so far, it's a wonderful concept. It's a wonderful platform. That protection that it gives could save a lot of companies from totally shutting down, whereby they could be revived. However, the charges or the cost of business rescue is extremely high, and the legal cost which comes with it, because there's a lot of court cases. What we have found is that your small to medium-sized enterprises have got no resources to successfully institute and see through a business rescue proceeding. So it's sort of like an advantage or a wonderful concept that is not really been afforded to your your small to medium-sized enterprises. So a lot of them don't even undertake business rescue at all. All right. And then obviously the last one there in terms of the challenge was that because we are coming from different professions, others are coming from the legal professions, others are coming from the accounting profession, there's been a sort of like a disconnect in terms of coming up with a standard set of requirements, competencies and experiences for what we call business rescue practitioners. So the idea here, we've been trying to ensure that your recognized professional bodies have like a certain standard in terms of requirements, so that if, say, for instance, if I'm coming as an accountant and I go to ACCA to issue me with a recommendation, should they refuse to issue me with a recommendation, I must not have the opportunity of jumping onto another professional body. Like, say, for instance, I go to the Law Society so that they can give me a recommendation. Because currently that weakness is there, and we are aware that there are actually practitioners who exercise that. So when they get dismissed from one legal profession, and therefore they can't get the recommendation, they simply just go shop around for another recognized professional body. But we are in the process of ensuring that that is resolved. All right. Then also harmonizing different stakeholder views. And by different stakeholders' views, I think you would appreciate that from the very nature of business rescue, because it sort of like balances the interests. Your creditors, especially secured creditors, including SARS, are not very happy with the protection that it offers, because it puts them at a disadvantage. But for the directors and the shareholders and the employees and the unions in general, you'd assume that they're obviously much happier having this particular Chapter 6 process, being afforded to them, so that they could save jobs and obviously save the sustainability of all the people that work for those particular companies. So the views are quite differing, and what we're still trying to do is to ensure that we harmonize them so that we all can come to sort of like a middle ground whereby everyone compromises. Okay, the second point there is a very important one, and just to make you understand what the implication of that is. So in most cases, when you have a business rescue, it's because a company has undergone financial distress. So either they have a solvency problem or they have a liquidity problem. All right, a solvency problem in that a company cannot meet their obligations as and when they fall due, or in some cases, companies have got structured borrowings or loans, and they are failing to meet their repayment requirements. So what we found as a challenge, which we are hoping to address through point number one, when we sort of like harmonize the so-called different stakeholders' views, is that when a company institutes business rescue, by the way, at CIPC, the legal status is actually going to indicate. So just like on your legal status at a CIPC, you will know when the company is in business or when it's in the registration process. When the company institutes business rescue, it will state that the business is actually in business rescue. All right. And what we have found is that that particular status sort of like disadvantages the company in business rescue from the point of view of obtaining what we call post-commencement funding, or PCF. So if, say, the issue that has sort of like driven the business to business rescue is that of solvency or cash flow, all right? In some cases, your turning around of the business is purely dependent on you being able to secure additional finance. But the minute you say you are in business rescue, what happens is that your stakeholders, such as your banks and financial institutions, they sort of like shut their doors to such businesses. And we found that as an issue. So because then there's no post-commencement funding, you find that it derails or prohibits the success of a business rescue, because now you cannot get funding to turn the business around. All right, so that's the issue of post-commencement funding. The other issue where, again, financial institutions are the leading cause is that in some business rescue proceedings, you might actually find that the business model is solid. So the business might have a solid business process and a business model. They've got a good product. It's a profitable product. But maybe when they borrowed, the structure of the loan was not favorable to the business. So in some cases, your whole business rescue and turning the business around is purely dependent on you restructuring that loan, making it more favorable and more affordable for the business. And in some cases, what they've found is that if financial institutions sometimes are not willing to come to the party in terms of restructuring those particular loans. All right, so that is one of the issues. Then obviously the last one where we're saying there's need for legislation to define terms and clarity, especially in terms of what they call reasonable prospect. Now, just to clarify what that reasonable prospect is, they are saying for a business rescue to be valid, all right, first of all, one condition is that the business must be in financial distress. Now, according to the Act, it actually defines financial distress, all right? Secondly, if the business is in financial distress, a business rescue practitioner through the business rescue plan, they must be able to demonstrate that there's a reasonable prospect of turning this business around. In short, what the regulator is trying to avoid there is a situation where companies use business rescue to shield themselves from creditors, whereby it's a situation which is inevitable. So if it's a situation which is inevitable, it needs to go into a liquidation. You do not want to sort of like, I don't know which term I can use. It's more like trying to resuscitate a person who you can clearly see is already dead, right? You don't want to waste resources and waste time. If a person is already dead, you know, you just want to refer such a person to a mortuary. So that is what that reasonable prospect essentially does. It says, look, if there's no prospect of resuscitating this company, then the company must institute liquidation procedures, because there is a cost of business rescue. And if you try to institute business rescue instead of straight liquidation, you might actually end up losing value for your shareholders, because there is cost in business rescue. So if a company fails to demonstrate reasonable prospect, then they will say business rescue is not valid. It should go straight into liquidation. All right. Now, the challenge there from a legislation perspective is that the legislation is not so clear in terms of defining what this so reasonable prospect is. Okay. Then
if I hear you right, that the way that the Act is written and that the definitions of the detail of business rescue is allowed for is basically unfolding as the business rescue cases are coming before the courts. So that the law actually allows for the practicalities of the cases that comes in front of the courts to determine how these things pan out. So it's obviously something that CPD is very important for, and that the professional bodies need to play an important role. So if I may interrupt you there, perhaps we can ask attendees to indicate if most of us aren't business rescue practitioners yet, but I've just started a poll there to ask which professional body would be most suitable for you, and you can vote there. We've heard that the CIPC is the formal custodian of registration, but that it uses the capacity of professional bodies to validate the capacity of the applicants. So CIMA, SAICA, SAIPA, ACCA, or if it's another professional body, you can type there in the chat for us just the name of the professional body that's most suitable for you. You may in fact select more than one if more than one is professional for you, or if it was possible to directly work with the CIPC to, in fact, to actually do it through the CIPC directly. So just as an indication, it looks like because we all ACCA members, that the ACCA is a very appropriate mechanism for us to do that through. So that's great that we already have the standing to be able to do so. I'm going to stop the poll now so we can share the result with you. It clearly shows that most of us on the webinar here today are in fact in favor of the ACCA being the mechanism through which we can get access to this, 97% of people on the webinar here today. So, if you wondered where we went, behind the blue screen, we appeared again. If I can ask, yeah, by the way, thank you very much for the questions. Nomsa, thank you also for being on the post there to start answer some of those questions around the role of the ACCA in accrediting business rescue practitioners and so on. We'll come to more details on the Q&A just now, But I will ask that, Marcia, if you can switch on your camera and unmute your microphone. So by the way, please keep posting your questions in the Q&A. Some of them we're already answering through the text answers. So if you haven't had your eye on that, you can keep your eye on that too. The rest of the questions we will address during our live discussion here a bit later on in the second half of the webinar. So Marcia, the public sector and the private sector is a bit different in many ways, including in this sense. So Carl, maybe if you can get us going there with the presentation that Marcia has for us. But welcome here and thank you for spending your time, Marcia, here with us today to educate us on how business rescue works in the public sector too. And then Carl, if you could get the slide going there. There we are. So Marcia, can you tell us more how this phenomenon works in the public sector?
Thank you, Christoph. It's slightly different in the public sector, except if a government institution is actually registered as a company. There are different legislative requirements for government. Basically, we use, depending on which arena or sphere of government the institution is in, we have the PFMA, the Public Finance Management Act, that governs certain of the entities, and the MFMA that governs others of the public sector. Now, in the public sector, different spheres of government need to agree on the process or the manner in which you're going to rescue an institution. And we obviously don't refer to it as business rescue in the public sector unless it's obviously a company. We refer to it as institutions that in distress. So it's slightly different because we have different legislation that governs it, which is prescriptive. It requires both the national sphere and the provincial sphere of government to agree on the method in which an institution will be rescued. Firstly, we have organized labor that makes it more difficult for us to rescue an institution. So the methods in which you are able to rescue an entity is obviously different. The processes take a lot longer because we are unable to restructure the organizational structure quickly. Basic services that need to be rendered by the institution are obviously mandated by what has brought it into being. There's always changes in political leadership. There's deficiencies in the public sector for skills and capacity, as well as to be able to retain highly skilled human capital. If we can move to the next slide, I'll quickly discuss for you what actually drives the types of intervention that are used in the public sector. Before we decide on an intervention that will be used in the public sector, basically what we do is different organs of state go into the institution, utilizing the data that is available to you to decide on what type of intervention would best suit the institution to improve, obviously, its effectiveness and to provide providing its services to the public more economically. So the first intervention that we have in the public sector is the support from both the national and provincial sphere of government without taking control of the entity. This is usually, in terms of the Constitution, Section 154 of the Constitution, where government goes in and provides specialized services or assistance to the institution based on the weaknesses that have been identified within the entity. The second one is placing the entity under administration while the political leadership remains in place. This is by means of taking control of the entity administratively. So government goes in, places an administrator there, and obviously the administrator needs to meet certain requirements within the public sector, and it's mainly with experience in that particular institution or sphere of government. Then the third one that we have is to dissolve both the governing structures and the administration of an entity, and thereby whichever sphere of government it is takes full control of the entity. And once it's up and running again, everything is reinstituted. However, we go into re-election and reappointment of staff members, and it's not necessarily the same people. So the process starts over again. If we can go through to the next slide, I'm just going to identify for you some of the methods in which we use to identify these institutions that are in distress. Usually there's an indication of political instability, technical insolvency based on different assessment tools that are used within government for monitoring and oversight. Early warning signals that are used by these tools, mainly it's cash flow problems, inability to generate sufficient revenue, inability to pay expenditure timelessly. Then obviously one of the main identifiers are weaknesses in governance structures and weaknesses in accounting structures. So if there isn't a CFO in place, that is obviously a warning sign, but not necessarily. So hence the development of the tools to be used. Then if an institution requests the business rescue from a sphere of government. So if we can move to the next one, all I'm going to do here is I'm going to just tell you some of the things that we use that have been successful for rescuing entities. Basically, the main thing is to obviously stabilize and build efficiencies through business process re-engineering. Now, here what I mean is the injection of skills from each sphere of government, where we can get it from other stakeholders in the arena of that, in that sphere of government. Then to inject financial resources in some instances, because obviously the services are mandated. So it's not the same as in the private sector where you can decide if a service is not rendering you sufficient profit, you can then decide that you're going to stop or sell off that part of your organization. Government, unfortunately, does not have that option. So one of the main things that we do is we look at revenue enhancement strategies. That's either to generate new streams of revenue, streamlining the current ones, improving debt collection rates. That's mainly how it's done within government. Cost-cutting measures, not so easy. You can only obtain it by streamlining your efficiencies that could exist and cutting down what is actually currently going wrong. Then to strategically implement cross-subsidization. Obviously, government, that's the way we work to ensure that all services are affordable to everyone. Then strong internal controls over key functions, utilizing investing opportunities appropriately. By this, I mean, if you have excess funds, investing it to generate the highest amount of revenue that you can utilize for your cross-subsidization, and obviously strengthening of governance structures. And what happens here is different spheres of government go in, provide training, provide support during the process, and once the governing structures are able to function on their own, then government slowly pulls out, but there's always the factor of monitoring. If we can move through to the last slide. Here I've just spoken about obviously strengthening leadership. Now, obviously government runs with the intention of providing the most effective economic service to the public. Now, here we require leaders that are motivational, inspirational, innovative to see how can you provide that service better. You know, bringing in all of your stakeholders within the public realm that you are operating in. So the business sector within your area, youth, etc. So you looking for what is the latest in technology. Partnering with the private sector to obtain obviously capital and then specialized skills and those skills that are scarce that you can't obtain within the public sector yourself. Improving capacity for revenue generating assets, capacity building, so training, more training provided, using new methods to retain those staff that you've trained so that they don't leave you. Obtaining synergy benefits between different organs within government. So utilizing what is available to you so that you don't have to incur cost for those. Reducing borrowings over the term, renegotiating interest, terms of the loans, ensuring that it's more affordable to the institution, thereby reducing the cost. Improving internal controls, i.e. using essential controls that are being prioritized, that obviously where there could be possible leakages of revenue and costs, and standardizing operating procedures. And then the one that is most a problem in the public sector is consequence management. Accountability isn't an issue. It's easy to identify where accountability lies, but consequence management becomes a greater problem. Because of the changes in both political leadership and administration within an entity during business rescue, there isn't anybody to continue with the processes of consequence management. So that's my perspective on the public sector. If anybody has any questions, then we can take them.
Yeah, there are in fact quite a few questions, but maybe before we get to the questions, if I may ask you, in fact, some of the questions relate to the practicalities of public sector business rescue.
Yes.
And people are asking the, sort of recent Northwest provincial government issues and so on. Is there perhaps a good example that you can mention of a recent public sector business rescue that we all would recognize?
Okay. The main sphere of government that's affected by the business rescue is local government, right? There are, like I said, those three options that government has to rescue a municipality. So you can either use Section 154 of the Constitution, thereby both spheres of government, national and provincial, are assisting the municipality in terms of all the areas of services that are provided. So you get agriculture coming in, energy, ESCOM, etc., to assist the water boards, provincial treasuries, the provincial and national COCSTA and COCTA in the province. So those are the local government spheres that actually are oversight over those. So when a municipality is placed under administration, we either utilize Section 139 of the Constitution, and you can either use A, B, or C of that. If you use B, and that's mostly the one that's being utilized currently at the municipality that I am at currently, it's under Section 139B. Now, when it's placed under 139B, an administrator comes in together with support from the province and provincial and national government. What happens is you get specialists in different spheres supporting that administrator. And there is overall guidance provided. So the decisions that are taken are actually taken by the provincial sphere of government. We refer to them as the provincial executive. Now, when that happens, the national sphere of government also has to concur that this initiative or intervention should have taken place. So it becomes slightly more complicated. So that's one of the examples that I can give you. If it's placed under Section 139C of the Constitution, it means government takes over the municipality completely. politically, council is dissolved, administration is removed, and government takes over. So the total running of it happens. What happened in the Northwest? I think they were placed under Section 100 of the Constitution. It's a similar thing. They were placed under administration, and the national sphere of government took over support of certain of their departments in the area.
So it would be accurate to say that in the public sector, it's driven by government, higher up levels of government mainly.
That's correct.
And compared to the public sector, the private sector rather, where it's driven by the organization, the company that is going under rescue.
That's
so
correct.
The directors and the owners of the company and the creditors that are driving the rescue for a company, as opposed to the government structures that drives the rescue for a public sector entity.
That's correct, Christoph. And one government institution can't decide that you're going to place it under rescue. It has to be a collective effort. So everybody goes in and has a look at what would be the most effective intervention to put in place. So it's not as easy because the services are mandated.
And then the rescue practitioner, are they then appointed by government to come and help on those? You set out those elements that one needs to address. So it would be appointment by the government structure as a professional service provider.
That's correct. And most of them are officials within government. So you will be appointed as they actually need you to have experience in that particular sector. So you can't get in somebody that's not going to be able to assist the institution to come out of it. Like, for example, if you are not an expert on tariff setting for water or tariff setting for electricity, we can't just call you in. So it's got to be somebody with the relevant experience and expertise. And obviously, because we're dealing with government, it has to be somebody that's appointed through the proper channels, otherwise it becomes irregular expenditure.
Great stuff. So, Winnerbach, if I can ask you that same question, but before I do so, maybe you can switch on your camera and your sound so long. I'm going to launch another poll just to get a sense from people in the room whether this whole thing of business rescue, and maybe Nomsa, you can also switch on your camera so that we can start look at the questions and answers and so on. The question for the poll here is same as previous polls. You can choose there to vote on what is best applicable to you. So is business rescue an option for you to add to your professional services? Yes, I'm already doing business rescue. Yes, I'm planning to register as a practitioner. Yes, it may be, but I'm new to business rescue. Or no, I would if I had additional capacity. I'm already having too much to do. Or no, business rescue is really not for me. It doesn't fit my profile as a professional. So if you can keep voting there, and I'll ask Winderby so long to, that same question in terms of a practical example, but maybe if you can kind of give us an idea, how does it actually happen for a business rescue practitioners from his or her perspective, sort of how are they connected with a company that goes under rescue? How do they pitch their services to that company, and the practicalities of that contracting between the company? How do they get paid? The practical part of a project as a business rescue practitioner. How does it start, and how does it unfold in for you in relationship to the professional body that you raised it under, the CIPC, and the reporting there, as well as your relationship with a client, which is the business?
All right. Thank you, Christoph. I hope everyone can hear me.
We just have the same sound issue that we had before. So either you or Nomsa must just turn down your speaker.
Yes, I've asked Nomsa to switch off hers. Okay, I hope that's much better. Yes, so from a practical perspective, what would normally happen is, like I said previously during the presentation, most of these proceedings are instituted by the management of the company itself, but it can be instituted by any other stakeholder that we've identified. So like if you look at in the case of the African Bank, it was actually instituted more by the employees than anybody else. So each business rescue proceedings becomes different in terms of how it commences. In most of the cases, obviously, the directors are going to say, look, as a business, we are having financial distress, you're having issues, and then they will personally go to the CIPC and apply using the COR 123, apply to the CIPC for the commencement of business rescue proceedings. Once CIPC responds with the COR 123.2, then they can then proceed and shop around for a business rescue practitioner. Now, obviously, in terms of that relationship dynamic, that's where we find some of the weaknesses or the challenges that I addressed towards the end of my presentation. That's where the challenges comes in that then you have the directors who have to appoint this business rescue practitioner. So then it becomes the question of to whom does the business rescue practitioner owe the allegiance to? So the business rescue practitioner will be appointed and obviously gets paid by the directors. Let me actually say the correct way of putting it would be that once appointed, the business rescue practitioner assumes the duty of a director of that particular business. So which means the accounts, the bank accounts, the contracts all become the responsibility of the business rescue practitioner. However, in terms of when they vote on the business plan, because remember, when the business rescue practitioner commences, he has to produce a business rescue plan. And that plan has to be presented to all the stakeholders. So your employees must be represented, your directors must be represented, your shareholders, your creditors, including SARS, must also be present and say, look, this is the business rescue plan. This is how we wish to proceed to obviously rescue this business. And then they will vote on that particular plan. However, among those stakeholders, what we found in practice is that your creditors and your directors have unfair advantages in terms of influence. So in most cases, you find that the business rescue practitioner might then end up being biased because in terms of allegiance, they'll either owe a lot of allegiance to the directors if the directors have a lot of influence in terms of the direction of the business rescue, or in some cases, if it's the creditor who has a lot of influence, then the business rescue practitioner sort of like owes allegiance to that particular creditor. But otherwise, the business rescue practitioner assumes full responsibility. So they continue the contracts, they can terminate the contracts, they can engage in new contracts under the business rescue. They can speak to lenders, they can secure borrowings, and essentially they are responsible for the day-to-day running of the business. One of the other practicality that we've noticed, which for me makes a lot of sense, is that when the business rescue practitioner comes in, normally they retain the services of the directors and management because obviously they've got more understanding of the business. But now the final authority vests with the business rescue practitioner as opposed to the directors.
And then the practitioner will ultimately report to the CIPC on the status of the project.
The business rescue, yes.
Right. Well, it looks like most of us in the room are keen, not yet involved, but keen to get involved. In fact, about a quarter of attendees of this webinar are about to register as practitioners. So there's some issuing of letters of competency coming your way, Nomsa. And then there's a good 60% that are thinking of becoming business rescue practitioners, but they're not close to registration yet. And in fact, there's only one person in the room that's already saying they're doing business rescue. So it is a fast expanding field for us to orientate ourselves towards. So thanks for participating in the poll there. It also gives us a sense of where people are at in terms of now answering the questions, which we're going to move on to now. So Nomsa, if I may ask you, so thank you very much, Wendaba and Nomsa. I see you guys have been active there in answering some of the questions in text. So by the way, if you haven't noticed, there's a Q&A button that you need to click to get to the questions that are being posted. If you have a question, you can post a question there. And you'll see others have posted their questions there. And some of these questions have been answered. You should be able to view all of that. If you have difficulty typing the chat for us, just guide you in getting access to that. But it will add to your understanding of what is happening here by following the questions there too. So Nomsa, if I may ask that you switch on your camera. And Wendaba too, please keep your camera on. And perhaps, Carol, you can just go to gallery view, then we can see everyone as we address the questions here. So Nomsa disappeared now. Nomsa, would you like to come on camera? Then we can talk about the questions. Thank you. And Wenderby, maybe you can switch your camera on too, then we can all kind of participate in the discussion here. So Nomsa, thank you very much for the text, answering of the text, but maybe just for completeness sake, from those questions that you already answered, can you just give us a summary of where things, a lot of the questions related to the ACCA's capacity to support practitioners and so on. But if you can just give us a summary there of what the issues are that people raised and what we should note.
I'm sorry, Chris, I didn't get exactly what you were saying because my audio was off.
Okay, so yeah, sorry, two of you in the same room. So no, we've got quite a few. We've got about 20 questions to address. So maybe we do have still a bit of time, so we may get through all of them. But I was wondering if you can just give us a summary of those questions that are important for us to note that have already been answered in the text part of the answers, so that everyone on the webinar actually notes those most important ones.
Okay. I think one of the key ones is if ACCA is accredited to have its members practice as business rescue practitioners. Yes, it is. But in terms of actually getting the license being issued, that is done by the CIPC, we only recommend that a member may get the license from the CIPC. Also, with regards to the question about renewing your membership as a business rescue practitioner, it initially, when the committee said for business rescue, it was recommended that we should renew the licenses every year, but it has been since decided that the licenses for business rescue practitioners will only be renewed every 3 years. Let me see which other question that I think everyone at least should know about. Oh, is that the webinar? We will share the webinar. The recording at a later stage. We will also share the presentations with all the attendees.
Yeah, don't worry about getting access to the information. There will be a link for you to actually, you can view the whole webinar if you wish to review it, as well as the PowerPoint presentations we'll share with all the details on. I think we may even look into, because I see the answers here is quite succinct. If it's possible, we may even share the question and answer text with people. So don't stress about noting down everything. But yeah, just to recognize some people here, that Amanda, Lawrence, Sibo Nkosi, Rishi, Charles, Tandai, guys, this is what makes these experiences worthwhile. Dionysius, your participation through the questions, because it makes it practical and useful for all of us. So we've got at least 3 very knowledgeable people in the room here from the ACCA and from their professional standing as business rescue practitioners, experts, and make use of this opportunity. We do have about just over half an hour still available on this webinar. So the questions are there. Now I'm going to ask Wenderby and Masha if you can also please just keep your eye there on the questions and identify the ones that you would like to tackle. But let's keep going, Nomsa. So there were others that you already answered in text that maybe we can just highlight too. Nomsa?
Okay, let's see. I'm trying to look at the questions that have not been answered also. There's a question here that is, well, that's a different question. Let me take the one around insolvency and business rescue. So one member has inquired if the license is for insolvency. So insolvency in South Africa, as ACCA, we are only recommending members to become business rescue practitioners, as business rescue and insolvency are 2 different, practices. But ACCA in the UK, members practice around insolvency and not business rescue. So you'll find that, I think there was a question around which professional bodies actually are recognized for insolvency. I only know of SAREPA, but I think you might also want to go and do your own research around any other question. And I think there's one around the time frame. If there's a time frame that is given to business rescue practitioners to execute and complete his or her work. As far as I know, the Act only recognizes about 6 months that is initially given, but then there are extensions. As you know, with business rescue plans, they are always rolling up to the final stages of the process. And I think it may go on to more than 2 years at some point. I think I will end there for now, Crystal.
No, great. Please keep adding in your comments as we go along. So, Wenderbar, it looked like you had a question there that you wanted to tackle.
Oh, yes. Just to confirm on the time frame. So when you go into the Act, it does stipulate some very basic timeframes, but the honest truth is no one ever adheres to them. Ideally, the Act was working around the time frame of a total, and I mean, this is the entire framework, time frame of 6 months. Now, when you look at the time frame of 6 months, it's not sufficient time for a business to be turned around. And it's the reason why I think we even included on the challenges, on the slides which I had for the challenges around business rescue, we included the time frame as it being too short. However, I think it's sort of like balancing interests here, because also you don't want the business rescue proceedings to take too long because it's a huge cost to the business. So you want the business rescue plan to be executed in the shortest amount of time possible, restructure everything, get the business onto a solvency basis again, and hand it over back to the directors for them to continue and sustain the business. That is the ideal. But I think I did indicate even on some of the answers there that we have witnessed certain business rescue proceedings going on for like 2 years. It's not supposed to be acceptable, but the CIPC also doesn't have too much. They don't have too much. Sort of like authority in that particular space, because the relationship primarily is between the business and the business rescue practitioner. So if the business deems it that, look, they want the practitioner on for another 3 years or so, then it will be. And like I said, there have been some rescue proceedings which have exceeded 2 years, but ideally it must be within the shortest possible time. There was also a question around the determination of the grading, as well as what work that they can do. Okay, just to clarify around that, there are no absolute thresholds, and by thresholds, I'm saying we can't put numbers to them. But normally what happens when you apply as a business rescue practitioner, CIPC is going to assess your experience in terms of business turnaround as well as business rescue. So your grading between junior, experienced, as well as senior is solely dependent on the experience, because by that time your competence requirements in terms of academic qualifications would have already been factored in. So then in terms of the work that you're allowed to do, like I said, without mentioning any absolutes, for much smaller business rescues. So if maybe according to organization value, we say small to medium-sized businesses, normally for those, a junior practitioner will be able to undertake them. Otherwise, then as the businesses get bigger, then they need an experienced business practitioner or a senior business practitioner. It also depends on the size and what I've called public interest. So like if, for instance, if you look at the issue of VBS, somebody was asking, okay, is VBS going to go into rescue? Yes, VBS can go into rescue. But because of the national interest and public interest around it, and the amount of attention it has drawn, say for instance, it might be too risky for a junior business rescue practitioner to be appointed to VBS rescue alone. So then what they might do is they might actually go not with one, but they might go with 2 or 3 business rescue practitioners just to give it capacity. And in some cases, they do what they call joint business rescue appointments. So in some cases, you appoint more than one business rescue practitioner. So for medium-sized businesses, what we've seen them doing is they'll say, okay, because of the size of the business, they'll appoint an experienced business rescue practitioner, but they are willing to go with a second, and the second one can be a junior. So then the junior works hand in hand with an experienced practitioner to ensure that there's capacity on the business rescue.
Yeah, and perhaps related to that is Elroy and Ronnie's questions. Elroy says, I'm curious about the fee structure of a practitioner, considering that the company would be in financial trouble. Does a practitioner only get paid if he is successful? That would be good. Are there any fee guidelines, Ronnie asks?
Yes, there are actually fee guidelines. I don't have them on the tips of my hand, but they are in the Act under Section 138. You're looking at about a rate of about 1,200 per hour that business rescue practitioners are supposed to charge. So in the Act, they actually stipulate them. They've got a three band fees, which they have there. And to be honest, from a practical point of view, those fees which are stipulated are sort of like the ceiling, because in honest truth, no small to medium-sized business is going to afford that, considering the amount of hours that you need a business rescue practitioner to be actively involved in a business rescue. Otherwise, then when the business rescue practitioner draws his fees, then we might as well put the company into liquidation thereafter. And by the way, the fees for the business rescue practitioners are preferential, so they take their fees before anyone else.
Okay, cool. So you stand first in line as the one that must make sure that everyone else gets paid too. Marsha, if I may ask you from the questions there that have been posted, if there are one or two that stands out for you.
I have answered a few, Christoph. Just want to go to them quickly.
Yeah, so perhaps if there's an important one that you want to share, so that we also have it on recording for people that may watch it in the future, even if it's answered in the text already.
Okay. One of the participants asked the question, is it different for different spheres of government? Right? Yes, it is. The legislation that is applicable to the different spheres of government are different. And the assessment tools that are used to go in and do the assessment for the interventions are slightly different for different spheres of government. However, the principles behind the interventions are the same. So either, whichever sphere it is, they'll either administratively take control, provide support without taking control, or they will dissolve the governing bodies of the institutions and take full control. And it's obviously dependent on the resources that are available to each sphere of government. So I think that's just one I would have wanted to highlight. And then, of course, lots of people are asking the question, you know, how is it that you would participate within government's business rescue? Obviously, you'd have to be at a strategic level, right? Because the thinking required to rescue an institution within government, based on the services that are being provided, you'd require that strategic ability to say, yes, I can see from this area, these are the cost savings, this is what I can generate, these are the internal controls that are imperative to rescue the organization that are missing currently. And then, as I said, it's very legislatively driven. Therefore, unions are involved. The stakeholders are a lot more than it would be in the private sector. So those need to be taken into consideration.
Right, thanks for that. So some repeat questions here and so on, but let's just I'll save this one for you, Nomsa. Peter is asking how ACCA is faring in relation with other professional bodies. I'm not sure how you can answer that. But maybe related to ACCA still, what other questions are there Maybe practically, if a member wants to proceed, Nomsa, what are the steps they need to take? So maybe we can cover that quickly.
Okay. So as a member, what they will be getting from ACCA is a letter of good standing. But at the same time, we do have an application form that we have prepared. If they look closely on what is happening in this space, all professional bodies have a certain process that has been put into place in order to kind of analyze if members are fit enough to be business rescue practitioners. Yes, being a member, it does put you in a good stand of actually being issued the license by the CIPC, but there will, as I think as Mandaba had mentioned in the beginning, a detailed CV is needed. So they will be scrutinizing that a lot in terms of looking at the experience that the member has. Thank you, Crystal.
So if there's someone on the webinar today that would like to kickstart that process for getting that letter, how should they do that?
They can send their queries to members@accaglobal.co.za and we'll attend to them. Yes.
Sorry, I did the cardinal mistake there of speaking while being muted. Nomsa, if you don't mind just typing that email address in the chat so that people can have that. So send your email and clearly indicate that you're interested in starting off with the business rescue process, and you'll get some communication back in terms of how that should be happening. And there, thanks, Carl. You're on the spot there. Members, ZA@accaglobal.com.
If I may add, Crystal, if they could just also on the subject line be very specific around it, business rescue query or application, so that we know what is it really required. Thank you.
Yeah, great. And there were quite a few of us, about a quarter of the room that's ready to go. So that would be great to see a spurt of applications happening and adding to the community of business rescue practitioners there. Rishi has a very specific question in terms of insolvency. So I got from your presentation, Wenderby, that insolvency is still there. Business rescue may be successful and prevents insolvency, but sometimes companies may go directly to insolvency and not to through business rescue. In fact, you can't assume that you will get business rescue. I think you have to apply to that and convince the court that business rescue is the right process to go. So Rishi is asking, in terms of the insolvency law, if I recall correctly, a creditor can apply directly to the CIPC for liquidation. So that's a creditor, it's not the company itself. That's applying for liquidation. With business rescue, is this feature of insolvency now removed, i.e., does the creditor have to wait for business rescue process to finish before a creditor can apply for liquidation of that company? I'm not sure, maybe Wenderby, that's directed at you, I think.
All right, are you able to hear me? Okay, so with regards to that question, I actually saw the question. I don't know why I was hesitant to respond to it. Insolvency is going to run parallel to business rescue. Business rescue does not take insolvency away. So it's still very much valid. In fact, if you checked on when I was doing the presentation, I spoke to one term there, maybe I didn't explain it. There was what we called brio when I talked about certain terms which the Act do not specifically address and clarify on. So what brio is they say business rescue, where your business rescue returns are better than in liquidation. It's actually a test which even the courts apply. So when you're applying for business rescue, you need to justify that by undergoing business rescue, your return in the business rescue, so in terms of what your shareholders are going to be able to get, will be better than if it went through insolvency, which is liquidation. So in the event that you cannot justify that, then they will recommend that you go straight through the insolvency route. So the provision of insolvency is still there, and in some cases, some people have applied for business rescue and it has not been granted, so they had to go through the insolvency route because there was no reasonable prospect of obviously reviving the business. In the event that there's no reasonable prospect, then you at least have to justify that if you go through business rescue, the stakeholders or the shareholders are going to get a better return. Mind you, business rescue does overlap into liquidation. There are some business rescue processes which purely when we looked at them, they were liquidation, but because of the business rescue process, the return that they generated for the shareholders was more better than if it was just a straightforward liquidation. I hope that assists.
Yeah, I think it does. But there's always, of course, the detail of things. We can only do as much as we can here today. But by the way, so if there's interest from anyone who wants to share a specific experience or in their work relating to business rescue, we can bring you into the room to share that with us too. What you need to do is to click on raising your hand. You'll see that little icon to raise your hand, and we can allow you into the room too. So as attendees, you can become a participant here today if you want to take up that challenge. We'll switch on your camera and your microphone, so you need to be ready for that. But not necessary to participate in that way. You can also, of course, still post questions. So if you have an outstanding question, please put it into the Q&A. We've got 3 left there to address. But let's save that for a moment. Nomsa, we'll come back to the remaining questions and wrap up the business rescue topic just now. But there's been some interesting events on the ethics and trust in current business environment that the ACCA has been involved in. And perhaps we can just spend a few minutes talking about that so that you can note what is happening there. There's also a conference, the national conference coming up and so on. So before we wrap up the webinar a bit later in addressing the final questions, Nomsa, can you share the news with us from the ACCA side?
Thank you, Christo, once again. So yesterday, as we all should know, we were celebrating the Global Ethics Day. And ACCA was very delighted to mark this occasion and partner with the Carnegie Council, which is the voice of ethics in international affairs, and also the CFA Institute. So as ACCA, as you all know as members, we firmly believe in ethical behavior. It is an integral part of our identity as ACCA in offices, also as ACCA, what we expect from members, students, and affiliates, as it is a key attribute of being a professional accountant and also driving performance that is sustainable for organizations. This is very key to the heart of the ACCA qualification. So yesterday, ACCA globally held various events in different markets, and also locally we did the same, where we were looking at ethical behavior in the profession, which is very distinct in terms of leadership and also in preparing like ethical future, which is presented with, which in ways we are trying to find human psychology as we've seen in South Africa. So I think I will share a bit that she mentioned that was quite key. She spoke on ethics in relation to the decay and degeneration of morals, to an extent a people lost moral compass, leading to the institutional failures that we are witnessing these days, experienced mostly in our country and all over the world. On a second topic, we also had another speaker who is Edwin Selbest, who is the audit advisory specialist at W Consulting. Edwin focused on a topic that should professional accountants be financial policy watchdogs. I think you guys should all have answers on that, but his views was, he explained the evolution that led to the experience and to the existence of NOCLA, which everyone I expect to have a little bit of knowledge around that. The duty of confidentiality under the code acted as a barrier for timely disclosure by professional accountants of fraud and other enforcement authorities in public interest. Now, NOCLA provides for disclosure of confidential information. If some of you are still not yet versed on that topic, please try and research quite a few things that you could find out on it. I know that last year there was a lot of information and committees that said to discuss NOCLA. I think one of the key initiatives that I would like to share with all members was what ACCA did globally in terms of showing the support of ethics. And so this, it's not completely printed, but it's something that you can do as a member. It's a certificate, if you can all see it. So the certificate, what it basically says is, to me, that is to, I'll make an example, to me as Nomsankomo, what does ethics mean to me, especially as accountants in your roles and also in making sure that you protect the public value and the interest. Some of the very interesting things that came up from accountants that took on to that initiative was, to me, ethics means character and morality. To me, it means doing the right thing and not the easy one, which is quite difficult to do in the corporations that we are all working at. The third one was, to me, ethics means moral values in action. Are we really able to practice these moral values at our workplaces as we try and practice them at our homes? The fourth one was respecting principles. And I'll just wrap up with this final one. But there were so many people that did pledge yesterday, which is you can still continue to do because it's something that we have to live by on a daily basis. Be accountable, be fair, and be honest. Maybe members at the end, Crystal, people can also do a bit of pledges and just write on the chat. Thank you.
Well, why don't we do that now? So let's, how do we phrase the question? What does ethical behavior mean to me? Or how did you phrase the question?
To me, ethics means.
For me, ethics means.
Yes.
So we can type that into the chat and say, for me, ethics mean, and then if you can continue typing there, maybe we can have a surprise prize for the best. No, that would be unethical.
That would be great. Thanks.
So yeah, what does ethics mean for you from a professional perspective? If you can use the chat to type in there. So let's start with the panelists. If you can show the way. Sorry to put you guys on the spot. Carl, you in the background there, by the way, we forgot about Carl pushing all the buttons for us. You can do so too. Nomsa, you were at the event, so probably you already have something to say.
Well, to me, ethics means be accountable and do the right thing and not what seems right.
Yeah, I see. Thanks for that. Lawrence saying, for me, ethics mean being truthful to my professional code of conduct at all times. And Charles, it's not Charles, in fact, his name is something else, Chola, I think, says it means doing the right thing even when no one is looking. And Andrew says ethics means upholding moral values. Alice says, for me, ethics mean that to act professionally and accountable in all my dealings. And Annie, having high moral fiber and doing things for the best of the community. And Polile says ethics means integrity and being able to walk away from some deals or relationships. That's probably an important point. Yeah, we've got many examples of unethical behavior where people were unable to walk away from what was happening around them. Some of them in quite hot water recently. I'm sorry, I'm not crying. I'm not sure why. The topic is kind of making my eye run. And then capital ethics, Lucia says ethics to act morally and doing things the right way. So thank you very much, guys, for sharing that. Of course, it is something that has got a personal meaning for us too, sort of acting ethically, whether it is in business rescue or other professional relations that we have, and also at home and our private relationships. So that's an important one. And thanks for sharing that, Nomsa. It's really important. So shall we return to a few last questions? We do have just less than 9 minutes left for today. So we're going to wrap up at the end and just ask the panelists to each share one or two important takeaways for you from this webinar that we hosted here today. No one raised their hands to come into the room, so maybe we can work a bit on that next time. We can get some of the attendees to actually become voices in the room too. But we do still have 4 questions or so to answer. So let's quickly jump onto the 4 questions, and then in the end we can wrap up with the panelists saying what they take away from today. So we can do it quite rapidly. In fact, I'm going to list the 4 questions, and then if you, Nomsa, Winnabai and Marsha, if you can pick which you want to address. So Rivash is asking, what is the success rate of business rescue, and is it affordable to companies in financial distress? We covered that financial part of it, but what is the success rate? Is there a record of rescue projects, and how many of them are successful? And then someone on a Galaxy is asking, do all parties have to consent, agree to the application? And then Amanda's asking, at which point does the work of the business rescue practitioner end? I think we've actually covered that one, so we can mark that as answered. And then Charles was asking, with the current state of the SA economy, does the financial status of business rescue practitioners influence whether they are appointed or not? The current. Oh, if you need rescue yourself, can you be a rescue practitioner? So any pick of those questions between yourselves. Let's go, Winnabai, can we start with you?
Okay, thank you very much for that. If I may just request that at the end of the webinar, when we share the information, maybe Nomsa, we can share the statistics which were issued for August. I think those ones are public already. Okay. We do have some numbers in terms of the success of business rescue. The numbers are not looking too good at the moment. I think that's why there's a lot of activism around trying to change the status quo. The last time when we were looking at the success rate of business rescue, it is just coming under 12%. And the trouble is the statistics which are there are not very reliable because of the poor reporting. I think I did indicate that one of the challenges that the CIPC is having is getting business rescue practitioners to report back to the CIPC. So say, for instance, if proceedings were instituted by a business rescue practitioner, the business rescue practitioner is supposed to then do a few things, which includes engaging with the stakeholders, holding a creditors meeting, voting on the business rescue plan, and then implementing that particular business plan. When the business plan is substantially implemented, now the Act does not really define what substantial implementation is, but I'm supposing it means achieving whatever you said you'd achieve in the business rescue plan. When those objectives or whatever the objects achieved, then we can say the business rescue proceedings has been substantially achieved. And then a filing at the CIPC is supposed to be done to take the business out of rescue. Now, that is ordinarily what's supposed to happen. What CIPC has observed is whereby very few practitioners have actually gone back to the CIPC to sort of like file for what they call substantial implementation. In which case then that would count as a success. At the moment, the ones which have been filed as successfully completed is only 12%. But also CIPC acknowledges the fact that there's been some business rescue applications which were started and they just never got any feedback. So no one knows whether post the proceedings, whether it was substantially implemented or it went into the liquidation stage. All right. CIPC also does get notification of business rescue proceedings which end up in liquidation. Okay, that percentage is also quite high, which is of concern, but obviously it's not totally unexpected, because when you go into rescue, yes, you want to revive a company and resuscitate it, but we all know that there is a possibility that should that fail, then the company goes into liquidation. All right, now with that aspect as well, the statistics are not accurate, because CIPC does not get notification of all the companies that end up in liquidation, because when it enters into liquidation, it's not CIPC that handles the application, but it's the master of the court. So because the whole business rescue proceedings happens in so many platforms, data gets lost somewhere along the lines. However, the general view of the status of business rescue in South Africa is that it's not where we want it to be. We obviously want it to be much better. We've identified the challenges, which includes the qualification of business rescue practitioners and the ethical conduct of business rescue practitioners. So we need to root out what we call rogue business rescue practitioners who normally just go in and destroy everything.
Yeah. So on that front, maybe we can.
That's what we're really trying to sort of like address.
Yeah. So on that, thanks for that comprehensive answer, Wandabai. So that, you know, as the industry grows, we may assume that the accuracy of the information will also improve.
Exactly.
But maybe we can, Moshat, the last question relates to this. If I can throw that one at you, I'm not sure if you're prepared for it, but can someone that is under financial distress or, you know, him or herself serve as a business rescue practitioner?
No. So the Act is very specific. Sorry about that. The Act is very specific in terms of the qualification under Section 138. You know, the normal disqualification of people who, what's this? If you are blacklisted, if you are under, there's a term I'm looking for. The person who has applied for, is it, not debt management, man. You know, if somebody goes bankrupt, there's that standard application they go through. So anybody who has gone through those, whether you are blacklisted or you've been declared incapable, as well as the disqualification of a director. So if somebody is disqualified in terms of the Companies Act to act as a director, automatically they become disqualified for appointment as a business rescue practitioner.
Great. So let's wrap up our discussion here. But before we do so, Nomsa, if you can just switch on your camera, please. And just, I must confess, I forgot to ask you about the public practicing requirements and how that is changing before we do the wrap up. Then we can ask, maybe we can even ask Carl as the producer today what he's taking away. So before we go into what we take away from the discussion, Nomsa, please share with us the changes, the adjustments in public practicing requirements.
I think
you can speak.
One of the
Okay,
Can I speak now?
We can hear you now, yes.
Okay, thank you. As ACCA members, you will remember that we have a practicing certificate, which requires you as a member to fill in a practicing certificate record, which you can only do so if you have been a member for more than 2 years, and that's the only time. So in South Africa, for example, to become a tax practitioner, you had to fill in the PCTR form and get a practicing certificate. I think beginning of the year, there were rules that changed globally in terms of members that are practicing in public. I think one of the key things, if a member does not really understand the definition of public practice, there is a fact sheet that will give you guidelines for you to understand and define yourself if you are a member in practice or not. I will send that fact sheet later on. So what the global office did was to take away the practicing certificate requirement. So all members were required now that what they need to do is to register on an international registry of practitioners, which is an ACCA registry. so that we are still able to monitor you as a member, and we still know that you are a member in good standing, you are continuing your CPD within that specific area that you are specializing in. That is still very much going, but South Africa was excluded in terms of tax practitioners. So tax practitioners were still required to get a practicing certificate. That is still ongoing, but until the end of 2018. As from 2019, the rule book, which governs how members should practice and how they should act, will be updated in January 2019, as it always is annually, and it will reflect the changes around the South African Global Practicing Rules Annexure, where it will state that now, as an ACCA member who wants to practice as a tax practitioner, you are no longer required to have a practicing certificate, which is a good thing for us locally. It means, though, we are not going to stop monitoring members. It doesn't mean that anyone should just be a tax practitioner and they do not continue doing their CPDs. That is the most important thing that I just wanted to share with members, that look out for the changes in the rule book that will be issued next year in January. Thank you.
Great stuff. So let's move on to wrapping up our discussion. So Carl, if you can give us the gallery view, then we can see everyone. And so much start with you, Carl. You've not been participating, you've been producing, but you're listening in for 2 hours now. So what is the one or two key things that you take away from our discussion here today?
Thank you, Christoph. I think besides it seeming to be quite a complicated and integrated and almost a messy situation with liquidation and business rescue running parallel, so the one doesn't exclude liquidation. It seems to me that principle of BRIL, of business rescue, offering a better result than liquidation, that seems to be sort of the crux of the starting point. And then I would actually say, well, if we're trying to do the business rescue practitioners out of work, maybe the better plan is to start and look at turnaround management before you get to the point of business rescue, because it's clearly not a protection against liquidation itself. So yeah, better prepared than looking for escape in the end. But a lot of knowledge in the room, and I see still, I think, a lot of guidance from ACCA needed going forward and plotting the route for South Africa in this.
Yeah. Great, thanks for that. I see there's still over 50 people in the room, which means we've been keeping people, if not in a learning environment, at least entertained. Marcia, what would you say would be the one or two takeaways for you from the webinar today?
I think it would be the time constraints that you have when conducting business rescue. Obviously, the time is never enough, especially in the public sector. Usually you get about 6 months unless you implement 154, which could be a lot longer. 6 months is not near enough for the local government sector.
Yeah, indeed. And Wenderby, what are your takeaways?
Thank you about that, Christoph. Yes, look, it's a very interesting, and for me, it's an important field for us as a country, whereby we're facing so many economic challenges, and business rescue could really come in handy to try to reduce the number of corporate failures. We're just hoping that the legislative framework is going to come to our rescue and clarify a lot of things and ensure that business rescue is more successful than it currently is.
Yeah, great stuff. And if we can ask Nomsa if you can sign us out for today.
I think I would just like to thank everyone for joining us on this webinar. Thank you for the knowledge that has been shared. I think just understanding how specialized is business rescue and how key a teamwork is in terms of making sure that companies actually do not go under, but they are managed correctly and they turn around and become sustainable organizations. I know that as ACCA members, you guys will do a sterling job because your qualification prepares you for that, both in terms of the technical skills and the ethical behaviors. So on that note, I'd like to thank our two key presenters. For me, it is always lovely to meet new ACCA members who are working in different areas. Mashe, it was nice meeting you and chatting with you quite a lot during these past few months as we're preparing for this webinar. Manaba, it is always great working with you and to see you sharing your knowledge so openly with our ACCA family. Crystal and Carol, thank you for your support in terms of putting everything together and teaching me quite a few things. ACCA members, I would like to recognize the panelists from our local member panel that I saw that they have joined. Thank you for attending, Bright and Ikaneng, and thank you to all the ACCA family. Thanks, guys. Have a great afternoon.
Great, everyone. Be productive, be ethical. Go rescue.
Thank you.
Bye-bye.
Bye.